Okay, hello and welcome back to the Mobile Mailbox Money Mastermind here today with the Family Bank, the live deal flow market. We appreciate you being here today. It'll be an action-packed meeting. Have a good amount of deal flow coming, a lot of questions to go over. But today is April 23rd here. We do this every Thursday. We are streaming live on Facebook, YouTube, LinkedIn. And I'm here today with my cohorts, my trusted partners and affiliates in the business with Win Mobile Homes, Mobile Mailbox Money, and Silvercrest Opportunity Fund. I think we're going to get a good amount of people logging in today, so we appreciate you being here. But let's just kind of jump off the meeting. Sonny Finkel is one of our investment liaisons. Sonny, if you could just introduce yourself and maybe talk about a little bit what's going on this week.
I'm Sonny Finkel, and I am the Investor Relations Specialist for Mobile Mailbox Money and Silvercrest Opportunity Fund. I am also the Loan Compliance Coordinator for Win Mobile Homes, and I help usher some of these deals into the know world so that they can be further invested upon. It has been a big week this week, and we are so excited. Life is good. Properties are selling, notes are selling, deals are being done. We helped a newly retired gentleman create some security in his portfolio and generate some generational wealth for his family. We actually helped a young woman escape her attacker and get a safe place for her to live, something she didn't think she could afford to do on her own. We helped a new family start off being homeowners after being renters for years. Lots of good feels. We're working hard to keep all kinds of people navigating the affordable housing crisis in the country, and we're really proud of what we do. So we're here to give you some idea on how you can do what we're doing.
Absolutely. Thanks so much, Sonny. Sean, if you're available, if you could just kind of introduce yourself for the viewers that don't know you.
Hey, Sean Gibson here. Sorry, I'm driving. I am a note specialist with Mobile Mailbox Money. Of course, also Win Mobile Homes. I like to call myself a jack of all trades. For number one, I'm an investor. I've invested with Mobile Mailbox Money as well, but I help our note investors buy notes, and I also help on the other side of Win Mobile Homes as far as acquiring and selling manufactured homes. So whatever needs to be done on each side, that's what I do.
Absolutely. We've got a couple other people from our platform. Serena Guajardo, my sister, executive sales agent of Win Mobile Homes, hasn't been on the meeting before. Serena, if you're available, maybe if you could just introduce yourself.
Hi, I'm Serena. I do a lot of the selling with Win Mobile Homes, so I just want to thank all of you guys. Without investors, the wheel doesn't keep turning. So you guys provide me with an income and the lifestyle that we have, which I'm blessed with. And on the day-to-day, you can find me out and about showing buyers homes, pre-qualifying buyers, and getting them ready for you guys and kind of creating those portfolios.
Thanks so much, Serena. And we have a couple of our VAs here. We've got a full staff, and that's why I have, people kind of introduce themselves. I got my partner here, James Guajardo, taking a back seat on the meeting today. Got a bunch of calls going on. But we're not just a lender. We're not just investors. We're also probably one of the largest operators in manufactured housing in the nation, I believe, and definitely in Arizona. So, what's the point of these meetings? It's to kind of show some more transparency, show you the deals that are going on, live due diligence, couple case studies, and the chat is open if you're in the meeting. So if you have any due diligence questions or, a comment or, really just want to gain further clarity into a specific subject, that's why we give you access to these meetings. If you're watching online, you can go to mobilemailboxmoney.com and join our list to get the link to this platform. I think it's actually on the description as well. But let's get into it. Today we're not talking about theory. We're talking through a live private credit portfolio with real assets, real borrowers, and real payments. Right now, across the portfolio, we have about $1.5 million deployed in Silvercrest Opportunity Fund, producing roughly about $19,000 a month in contractual payments. So for the people that are syndicators and funds and things of that nature, that's a snapshot of what you could create With as little as 1.5 million, cash flowing 19,000 a month, that's about 27 positions. So for 1.5 million, I got 27 different assets at the end of the day, pretty insulated in case of non-performance. But everything you're about to see is built around one core idea: contractual income secured by necessity-based housing. Let me put my phone on Do Not Disturb. I'm getting a couple texts here. So let me start with a simple case study, which I'll get into here in a moment, like Lot 3 in Chaparral Village. This is a property that we haven't acquired yet, but it's actually listed through our brokerage, and the buyer for the property doesn't have financing. The seller is willing to take a cash offer, which provides us a margin upon repositioning a seller finance note to the end user buyer, exiting at around 75,000. But the real value wasn't the flip. We created a $70,000 seller finance note, paying about $870 a month on a 20-year term. And Serena's actually the agent on that transaction. That's off Kyrene and Baseline. We've done probably $2 million off that one major cross street. So instead of taking a one-time gain, which is great, we parlay that and created a long-term income stream. And that's the shift. Most people are focused on buying property, timing the market, hoping for appreciation, where we're focused on creating the payment at the end of the day. I want to get paid. I don't want to own an asset. I don't want to manage it. I don't want to have to worry about fluctuations in insurance costs. I want to get paid. And where do we position ourselves given the financial market to get paid? You know, right now we're deploying capital into short-term construction positions in order to facilitate a first right of refusal on the seller finance notes that inadvertently come available on these properties. Deals like $50,000 positions paying $400 to $500 a month in first-lien and a 12-month interest-only annualized residual income. Some people like just staying in that short-term component. They get a call for liquidity. They're available to do title transactions, transfers. You know, these deals could potentially mature within 3 to 6 months. You know, some go a little bit longer, some go a little bit less. It just kind of depends on the market. But your capital is working immediately while we improve and stabilize the asset. And then once that asset is stabilized, we convert it into a high yield seller finance note. That's exactly what you're seeing when I brought up La Montaña last week. At 96.5, paying $1,200 a month on a 20-year term. And we'll get into some of these deals here in just a moment. So think about that transaction, right? Short-term deployment, stabilize into a stabilized asset, now converted to a long-term cash flowing note. That whole ecosystem comes with opportunities in each of them. So that's not a deal, that's a repeatable system. Now let's talk about the pipeline. We've got incoming assets right now, like a Long Haven deal that we're releasing to the public, a newer unit that is going through the same process where we've acquired possession of that home and now have it either available for you to buy and rent out that home for some potential tax incentive or seller finance, and we create the note and ultimately you buy that note outside of the construction term. Also, Meridian, we actually just got a wire about 5 minutes ago where I think it was lot 123, lot 123, which we just completed. So now that's a note sold producing long-term income for our capital investor. So you're seeing all three stages today. You know, why am I even talking about this? We give you all three stages in a transparent format for capital deployment, note creation, and long-term cash flow. Now, I want to address something directly before we get into these deals. A lot of people hear manufactured housing and they immediately think, is that stable? But let's really think about what's unstable right now. Interest rates, traditional housing affordability, the equity markets, all moving. And what we're in is in necessity-based housing. Listen, if a property that you buy a note on does go non-performing, the chances of that absorption and potential additional profit made or capital preservation or some minimal loss potential, there's risk in investment. The availability of that property to re-cash flow, be absorbed by an end user, is that much more likely than a single family property. And why is that? It's a personal property unit that comes with its pros and cons at the end of the day, but it being a personal property unit, within 40 days of non-payment, we repossess the property, retitle the home, and likely may even pre-market that property for sale, some of the bells and whistles that we provide. So these are people who are needing a place to live, are priced out of traditional financing, and are making payments often at or below market rent. So their behavior is different. They don't speculate, they don't churn, they stay and pay. And that's where stability comes from. Not from the structure of the home. The home is structurally sound, backed by Warren Buffett investment strategy, but for demand for housing, there's a market shortage of housing right now. So altogether, what you have is first lien positions, borrowers with skin in the game, fixed payment streams, and income backed by real assets. That's not unstable. That's called structured income. And when you build a system around that, construction lending, stabilization, note creation, long-term payments, you're not chasing deals anymore. You're building a capital cycle. And that's what this is, not a flip, not a one-off investment, a system. And that system is what allows us to scale from one deal to a portfolio producing $19,000 a month in passive cash flow with no maintenance, management, insurance, and taxes. So if you take anything away from today, it's this. Stop focusing on the property and start focusing and positioning into a payment stream. So let's kind of talk about some deals that we have. We'll share my screen here and we'll get into the meat and potatoes of this meeting today. We got 4 people streaming live on Facebook right now. So let's talk about Lot 9. Lot 9 just sold out of Silvercrest's position. Silvercrest had the construction loan and a investor actually just bought this position, I think yesterday or the day before. They may even be on here today, so we appreciate your investment. Lot 9, the buyer borrower there. Let me just pull up my notes here.
I got you.
Go ahead.
It was a $44,900 sale, $3,000 down, so a $41,900 note. The payments are $551.73, and this was this didn't even make it to the website. The notes are selling so fast right now.
So this home an investor bought using other people's money, pledging the note in order to garnish capital investment. He took a high-level strategy in note investments called hypothecation and parlayed his relationship, who took a satisfactory interest-only term, I think for a 3-year term, and they both cash flow together. That investor used none of his own money. He got a quality collateral, high yield performing asset in the highest position in the capital stack, and gave his investor a monthly distribution for a multi-year contract. That's quite literally the definition of financial freedom. So that's Lot 9, sold, not available. Lot 30, this property just came back available. We had a cash offer, and ultimately the buyer did not perform. So I think I talked last week about it being under contract. It's currently available for a construction lending partner via private credit to extend at a $50,000 position, interest only, for $416.66 a month. Right? So making $5,000 a year in passive cash flow. The benefit, like I talked previously, is the construction lender will likely get a call for liquidity here in the next 3 to 6 months or less, but also they'll get a first right of refusal on a quality, affordable, double wide in the Mesa market. This is Brentwood West, Central Mesa. This community has water, walking ways, grass throughout. If you have grass in a common area in Arizona, that's big money at the end of the day. The maintenance just to keep stuff up like that. So they're putting good money, right, to facilitate a quality, affordable, and neighborhood style living. All these homes, wish I had a street view here, are ground set. So that kind of adds to the neighborhood style of this, this community, gated pools, jacuzzis, not your grandmother's mobile home park, but at the end of the day, they got a pickleball court and a couple other things like that. But that is immediately available. $50,000 for $1,666 a month for an interest-only 1-year term, likely providing liquidity within a couple months. So this is the home that I was talking about. Quick case study, right, of a property that we have listed off Kyrene and Baseline in a park where we've done a tremendous amount of transactions. So this is lot 3. Lot 3. Just pull up my notes. We have a cash offer position potential for this property with a buyer already in place. This buyer has agreed to pay $70,000. We got a discount from the seller in order to provide liquidity to this transaction. So what does that mean? That means that Jenny Mae is selling to John. John, the buyer, can't get financing for the home. So we present Jenny, the homeowner, the seller, a cash offer at $40,000 flat, right? Provide her liquidity to the transaction and underwrite and qualify the buyer borrower to an increased price point. So not only are we doing another transaction, we're making a margin from what we bought it for to what we sold it at, $40,000 to $75,000. So we have a $35,000 margin on this transaction. The buyer borrower's putting a $5,000 down payment towards the balance, right? Sorry, my dog's barking in the background. $5,000 down on $75,000. Their unpaid balance is, $5,000 down on $75,000. Their unpaid balance is $70,000, and they will be making a monthly payment for a 20-year term of $870.46. If you don't have a mortgage calculator, I always say at every meeting, do yourself a service and download Carl's mortgage calculator. I need to get my marketing fee from them, Carl's mortgage calculator, one of these days. But that kind of teaches you how to reverse calculate and engineer a return on investment. High yield on this transaction, for $70,000, where can you find $870 a month with a bow at the end of the day? It's virtually non-existent. This same note, say you didn't want to own it for a 20-year term at $70,000, I'll give you a 1-year term at a $70,000 hypothecation times your proposed interest rate, interest only, divided by 12 is $583.33. So now you step into a stabilized asset as almost like a private lender component, and you get a 1-year liquidity. So every year, kind of call you, say, hey, congratulations, you've been receiving your monthly payments. Would you like to auto renew or ultimately get liquidity within your transaction? Pretty nimble in that accord. And you made, over $6,500 a year in first-lien position, backed by performing collateral and one of the largest qualified operators in the nation in is this a 3-2? A 3-bed, 2-bath, where we have a tremendous amount of demand for a double wide. This is a family park in Chaparral Village off Kyrene and Baseline. So, that's kind of just a talk through of a couple of the types of transactions that we come across at any given time. We get calls for cash offers. We get calls from people that have a buyer for their property and they can't get financing. We get calls from people in eviction and hoarder houses, all the above. Are we going to provide financing on every transaction that comes across our desk? No, not by any means. We treat every dollar like it's our own capital at the end of the day in order to preserve have capital preservation and ultimately reduce the risk of loss. So let's continue here. We don't talk about rentals all that often, but I've been getting more requests kind of than ever because of our marketing and the amount of investors that we're coming across. These Long Haven deals, and I have a few like this in this same park, and I have like one in Mesa and a couple others that are pretty choice. You know, we have our best pricing ever right now, especially for like brand new homes just like this. But to buy a property for $44,000, this home, and rent it out, say at $1,450 a month, you know, that hits your 1% rule at the end of the day for less than what it would cost to pay cash for a residential property. I think we have like 9 of these left. So we've rented a few of them and are talking to a couple others about some lease option to purchase. But this park is pretty nimble in their restrictions. They don't restrict rentals. Most parks do, especially family parks. This is a 55 and older community, so you'll have the benefit of someone on guaranteed income in most cases, Social Security, you know, things of that nature. But that's a 2-bed, 1-bath, $44,000. We got a few of those available for rentals. Okay. So that's on winmobilehomes.com. I'm going to highlight one more that could be a rental. That's lot 1736. If my dog will stop barking in the background. Whoops. So lot 1736. Sorry, my screen's going crazy. At 49.5, this property is off major cross streets of Ellsworth and Broadway. So this is a 2-bed, 2-bath. It's a newer property and actually immediately available. It's at like 45,000, 46,000. Have to double check here real quick. But you could buy this home and actually rent it out. So that's in Mesa in Monte Vista Village. Make sure I'm still sharing my screen. Oh, looks like I messed that up. Here we are. Lot 1736. So great property, great location, available for someone to rent. You could buy it and sell or finance it. We got a great price on this home. Equity Lifestyle Solutions manages this community, and we're at our limit with ELS, so we're not able to rent it. But, you know, our loss is your reward at the end of the day. They won't allow us to own more than 3 properties across their portfolio, where other communities allow us to own as many as we'd like at the end of the day. So super gems, you know, that's, what did we reduce to? 49.5. That's a 2-bed, 2-bath in Mesa. We had our Long Haven property at 44,000. You know, this lot 3 deal at 70,000, lot 30 at 50,000, and recently sold lot 9 at about 41,000. You know, all of those notes are found at mobilemailboxmoney.com, and that's where we provide updates outside of these meetings. You know, if you're unacquainted with the website, go and sign up. You know, that allows you first come, first serve access. You know, how do you get actually preferred access to the notes that we originate? You know, you kind of want to get to the front of the line or whatever it may be. Cheaper capital. If you have money, you know, sitting around at a cheaper rate, we could deploy $1 million at the end of the day and help you get your first right of refusal of the high yield note that ends up coming available. You know, all of these notes, we are so nimble in itself. You could buy the whole note and pledge it against. I could pledge against my note for a 1-year term, still at a double-digit interest rate. You could buy the whole note and make the full yield, or every one of these positions could be absorbed into my fund, which is our 506C Reg D accredited investment offering, where we provide accredited investors a 10% return for a 1-year term paid monthly, or a 12% return for a 3-year term paid quarterly, backed by a Warren Buffett investment strategy. I recently have been posting a tremendous amount on my Facebook. Just pull that up here real quick. Bear with me here. And I've been doing some vlogging, and Sonny, you're typing in the background here, just a heads up.
I'm putting some info in the chat.
Oh, great. So vlog 149. I'm just going to click on this here real quick. So, whoops, from walkthrough videos to actual live due diligence, you know, this is a literal view into an acquisition I'm currently looking at. If I can mute this somehow. There we are. There we go. So, you know, as I develop relationships in the Valley, I get more and more calls of people in this situation who are distressed. They need a cash offer, and not many people do manufactured housing. So to look into the back office view of our walkthroughs and even acquisitions to testimonials to all the above, you know, don't hesitate to add me on Facebook at Alden Guajardo and go check out this vlog, because this is a life-changing moment for us. We've formed a partnership with one of the largest roofing and construction companies in Arizona, Griffin Roofing and Construction. So shout out to Patrick and Russ, Patrick McNamara and Russ Hyman. Russ Hyman's son actually bought a property from us in Tempe. But as we, you know, walk through these homes, now we have that much more stable and cyclical processes to do that many more transactions, which means more notes for you guys. You know, you don't have to buy a property like this with damaged subfloor and fix it up. You know, you just come in on the back end at the end of the day and participate in the note. So go check that out, vlog 149. That'll go up on YouTube here soon. Bouncing back and forth, trying to get all this stuff done. This is another cash offer that this is the photos. So these are the photos that they sent me, the wholesaler. I won't go into that actually. But that's a more affordable acquisition. This property, vlog 149, lot 54. This is a $20,000 position. So I don't have positions like this very often at $20,000. It's really just for our acquisition and lot rent, and our construction partner will be doing the rehab. At $20,000 times your proposed interest rate is $166.66. So from $20,000 to $50,000 to $70,000 to a couple other opportunities that I have in our back portfolio at around $100. You know, wide variety of diversification capability. You know, you're making more money with less capital in any other adjacent real estate investment strategy. It's non-existent, these returns that we provide in our portfolio. So today's brought to you by Silvercrest and Mobile Mailbox Money. Win Mobile Homes is where we post our homes for sale. If you're curious about the homes that we have in Mesa, Tempe, Phoenix, Glendale, want to see me a couple years ago talk about our strategy, you know, that's where you go to cure your curiosity, to view all the homes that we have. We have about 50 in inventory right now in Mesa, Tempe, Phoenix, Glendale, Apache, Junction. I have 1,000 videos on YouTube, from educational content to walkthrough videos to AI generated informational, eye-opening educational videos, you know, all the above to cure your curiosity. I'm going to open it up real quick. Sonny, what are some of the questions that people have been asking lately, or even just now on the chat? Oh, you're muted.
Sorry. The conversations in the chat are not specific to this. They're individuals, but just the usual questions that we pretty much go over every week. Due diligence questions, the difference between construction notes and 100% assignment notes. what are the different options as far as percentages of interest that are paid, whether you take the payments monthly or whether you do deferred payments. I mean, we have options for everyone in every situation.
So I got a question on LinkedIn the other day, and they said, Alden, first-lien note funds live or die on underwriting, discipline, and servicing relationships. I've watched too many funds marketed as structured that couldn't handle a 200-plus basis rate move. The accredited investor exclusively is in smart positioning, but the real test is how the fund performs when borrowers start missing payments. That's a great analytical look at what's going on with adjacent private credit funds. For us, if we can position the same capital, say $500,000 across 10 notes or even 5, our risk is that much more mitigated. On top of that, in comparison to a real estate note investment strategy, our notes go through 2 rounds of underwriting. So she mentioned, the need for disciplined underwriting, right? Where it's not even up to us. It's not up to the investor trying to do a transaction. They have to go through both rounds in order to hit benchmarks and facilitate an ability to repay. And what does that look like? Well, the buyer borrower not only has to fit ability to repay in Dodd-Frank compliance, but they go through the community who checks previous criminal convictions, which is up on real estate notes specifically. They check evictions. You could buy a mortgage. You could get a mortgage with it in eviction at the end of the day, and they check obviously verified income and no open bankruptcies. Once they get through that, a third party takes them to do those checks and balances, the community. They go through a secondary underwriting for the ATR and Dodd-Frank compliance. So I care to argue that these are that much more of a investment grade at the end of the day than real estate notes. Yes, there is risk in investment. And what happens when we have notes go non-performing? We're not just the lender. Most people look at funds and say, they're just the capital part of the positioning. We started with boots on the ground as Win Mobile Homes 8 years ago. That's 400 transactions, $30 million in sales and private capital towards this strategy at a 2% default rate. When we do get homes that go non-performing, we already have a back office strategy in churning buyer borrower pool with the 50 homes that we have in inventory in various stages of rehab, in escrow to sale, or on the available market. So, if I were just a private credit fund, there probably would be some escalated clarity needed in order to facilitate a safe, stable position. Whereas for us, if it's not the end of the world if a note does go non-performing, our objective is to make sure upfront that it's mitigated so that it has the least likelihood of actually going into the risk coming to fruition. But knowing that we're a multifaceted component, with 7 in sales, 5 in management, about 10 in rehab, and now a roofing and construction partner that has come into the equation, that's, I think, really eye-opening for a lot of individuals. I had another comment on my LinkedIn that I'm going to try and find real quick. Bear with me here. So Michael Eskensenesi said $966 a month looks clean, but the real question is durability. What's the effective yield after defaults, servicing, and vacancy resets on this borrower profile? Curious how your underwriting borrower qualified and exit on a single wide in a leased land community, because that's where these either compound or break. So, kind of the same equation. A lot of people are worrying about defaults. There's a lot of uncertainty out in the market. At the end of the day, I care to present that likely with the shift in the current financial market, let's say that you do end up having a note that goes non-performing, you'll likely get a higher qualified individual in the door looking for a downsizing equation or tired of paying $2,000 a month in rent than the historical representation of someone that was buying mobile homes 5 years ago. Why is that? Because the middle class is being pushed down, right? And obviously the upper class is getting that much more wealthy, but the middle class is being squeezed down into these more affordable solutions. You know, if that same family 5 years ago was paying $1,500 a month in rent for a 4-bedroom and now it's $3,500, you know, they're being literally blindsided from every corner. And how do they reduce their cost of living without having to move out of state and are tired of subject rent being $3,500, $3,000, $2,500 for a 2-2 in a nice area? They go to these now turnkey options out in the market. So say we did repossess that home. Now we'll get that much more higher of a qualified client. The property will hold its value given the current financial market, which we have 1 or 2 that we've repossessed in the past 2 years. So those homes we repositioned and actually broke even on those transactions. Did we make additional profit? Sometimes we do, but the most important is not to lose any money at the end of the day. You know, given
investment strategy
if non-performance is that much of a concern for an individual, your best bet is to invest in the fund. And why is that? Because you're not betting on one note with one borrower. You're in a per unit owner share within a portfolio across 27 positions. You know, yes, a single note has stability and it's underwritten. They're double qualified with skin in the game. But some people are looking for some more set it and forget it programs. And I think that's exactly where Silvercrest comes in. You know, for the people that raise capital, we'd love to talk to you personally. I'm going to put my personal phone number here, as I do sometimes, in the chat. Feel free to contact me direct. Let's get Sean enlisted here real quick. Sean, any questions that people have been asking lately?
Can you hear me?
Yeah, I can. What's a common question?
Yeah, so the common question that I hear is, what if a client wants to move their manufactured home to a different location closer to their family member? Can that be done?
Great question. You know, anything can be done at the end of the day, but it's important to know that there's no wheels, no axles, and you have to get a permit and a licensed individual in order to transport the unit. No, you can't pull up with an F-150 and just pull the home away. The F-150 would probably die in the parking lot. Also, what's it cost to relocate a home? You know, that's probably $20,000 a side, including transport and setup, depending on how far it is. So they bought an affordable manufactured home, right? They likely financed. Do you think they're going to have maybe $20,000 aside to spend to move a property off of that lot? Not super likely. In addition to that, in the note, it's actually considered defaulted if they do express interest in moving the property. They have to pay it off. So they could maybe refinance, find some money elsewhere, pay off the loan, and then possibly move the unit. And third, fourth, fifth, the state of Arizona, the cities, the zoning and things of that nature don't permit homes. I think it's older than year 2000 to actually be placed on a lot here in the Valley. So multiple, negative factors that contribute to an individual really not ever entertaining even moving the property. And if they were to entertain it, they would be see some serious pushback, not only because the property's not on wheels and axles and you can't just pull it off, but the community's going to throw a fit. The property, the community has a lot lease that is obligated and contractual. They're obligated to the lease of the community. The loan would be called due, all kinds of different safety and checks and balances put into place in order to make sure that a property is not quote unquote easily movable. These are not easily movable units. They've literally been in the same place likely for 40 years. And now they've been bought, rehabbed, and sold, and will go through their second 40, 50-year life cycle in its same lot, in the same location, with no transport in equation. Sean, what's one more question? I'm going to pick on you right now.
It sounds good. Yeah, I've got actually a big one from some of my Canadian investors, like they always have. Since I was there in Canada, and we're in not Mexico, but Arizona. They've got their concern about, of course, our immigration. I know a lot of our clients are Hispanic. Have we had any issues with our clients being deported or defaulting because of deportation? That's one of their kind of main concerns, of being not in the U.S. and us being a border state.
So a good portion of our portfolio and end user buyer borrower is an ITIN borrower. And ITIN individuals going through the formal processes to make sure they're doing it correctly to live here in the States. And ITIN is the definition of an international tax identification number. That means they're reporting taxes in order to prove income and be a contributing individual in society. You know what the single best buyer borrower is at the end of the day? It's an ITIN borrower. They pay early. They never have an issue with the property. They never call. They pay, they pay on time. Yes, potentially they could get deported. It's important to understand where they're working, what's their environment, how are they making their income, are they working for a large scale construction company that could get raided or something of that nature? That's something to take into account. But a lot of these people are business owners. They own a large landscaping company or something of that nature, or maybe a medium-sized company, and they're making decent income. They're just looking for a place to plant their flag at the end of the day and ultimately raise a family. Single-handedly I have experienced over the past 8 years, our best person performing in any situation is a Hispanic individual planting their flag here in the Arizona market. So that was a great one to go over. Important to know, like I said, where they're working, what they do for income, how stable is that, where are they frequenting as far as their occupation. All of those are factors in order to establish risk mitigation. Let's say they do end up getting deported, right? Worst comes to worst, people always want to point out what could happen in the worst situation. People wonder what's going to happen. There's a physical asset there. You own the lien on the property, and with 40 days of non-payment, you retake the home. It's a physical asset in place. It's not an uncollateralized loan, right? You're protected by the asset and the contracts that fulfills an obligation to the buyer borrower. So all great topics. Any, put a quick question in the chat if you have one. We're getting some decent interaction today. A couple hearts going. We'll just give it one moment, see if anyone has a burning desire.
I've got one more, Alden.
Go ahead.
That I hear all the time. I've got some investors, some wholesale guys say, well, Sean, why can't I just buy a manufactured home, fix it up, put a ballroom place and do that? Why am I buying a note from you? Why can't I just do it myself?
So I'll explain it as I explained it to my roofing and construction partner. It's all fun and games to go buy, rehab, and put a property out for sale on the market. But when every buyer comes to the table looking for financing and they don't know where to get financing, or they can't get financing, and you went through 5, 6, 7 people that were interested over 6 months because it was priced right. You had people come walk through the property. They literally wanted to buy the house, but they couldn't get financing, and you wanted your cash. You didn't want to seller finance. You don't know how to seller finance. You don't have the bells and whistles to seller finance. That creates a hardship. You can only do that so many times, lose capital, and then ultimately think that it's a failed strategy, right? Where we've had to get nimble. That's exactly what happened to us. we had to go and build an entire new business called Mobile Mailbox Money to raise funds and educate people into note investment strategies combined with manufactured housing in order to provide liquidity to our fix and flip strategy. Yes, if you're a highly educated note investor with adjacents in general contracting, you may be able to stumble your way through these problems at the end of the day, but there's multiple hatchets and hurricanes and tornadoes that come into play, like the mobile home parks themselves. Every mobile home park manager is a bulldog. They're trained to be firm, and there's no ifs, ands, or buts. Like I said, with ELS, they don't allow us to buy more than 3 properties, and we're having to sell a home because we can't rent it, at the end of the day. So, those are just some common things that come up. Fix and flipping properties is a full-time job. If you think you're just going to go passively buy a wholesale home, fix and flip it, and exit it via seller finance, you're mistaken. We do this full time, 9 to 9, Monday to Monday, with an extreme team, environment behind us at the end of the day, from previous licensed mortgage officers to a licensed mortgage officer on staff to sales agents, management, 3 attorneys on retainer, automatic fund transfer contracts, attorney reviewed contracts. I'll tell you from firsthand experience, you go fix and flip a bunch of homes, someone's going to try and sue you. Anyone can sue anybody for anything. And if an end user buyer ultimately thinks they're buying the Taj Mahal, which is not would be a misrepresentation, right? Which is not what we do. They could potentially lay claim. Are you prepared to do that? We do all of this work, skirt all of this risk, and execute in a intelligent strategy for you to come off the top like the eagle you are and pick the pick of the litter with a bow of capital investment at the end of the day. The fact that I even provide this stuff for free out online is the difference between Joe Schmo across the nation to individuals that are actually trying to provide quality solutions to deserving borrowers, but also passive investments for investors. If the individual doesn't see the value in the high yield performing collateral that we have, they're really a sweat equity operator. And this isn't a sweat equity operation at the end of the day. Your best investment is into yourself. And until you max that, right, and max maybe your current business, you won't see the value in a high yield passive investment. And when you do, and maybe now you're accredited and you see the adjacent real estate investment return on investment out in the market, you now have the eyes to see the opportunity that's at hand. I talked to a tremendous amount of individuals across the nation, and they all agree, there's a problem for them. They can't find the monthly income right now outside of high risk, stocks and things of that nature to go fulfill and live their life. This is not, again, for the sweat equity operator. It's for the individual that is having challenge and has capital. They have to place money because they're losing to inflation. Inflation's like 4 or 5% right now. And they even reworked how they calculate inflation a couple years ago. So that could be even higher. So, your want for safety, stability, and security, as well as a passive income-oriented investment strategy, is found here, not 20 to 50% high-risk returns and sweat equity operations. This is literally bank-quality investment strategy in the highest position in the capital stack. And in most cases, in those adjacent positions, in first-lien positions, you're making 4 to 8% on your money, right? That's where I think a lot of people start to realize, okay, I think this kid knows what he's talking about. So we appreciate you being here today. It's 1:53. Any last comments? We're getting some hearts in the chat. Sonny was going back and forth with some people. We do this every week, and the want for transparency, trust, And why is that so important? You know, because people do business with the people they know, like, and trust. And hopefully with our partnership with Arizona Real Estate Investors Association, Silvercrest Opportunity Fund is the main corporate sponsor of AZREIA. That's the Phoenix Real Estate Meetup, located venue 8600 in North Scottsdale, second Monday of every month. So we're there every month, get up and kind of talk and tell people how we're the main sponsor. Not only that, but also Win Mobile Homes holds the industry category for manufactured housing in one of the largest business network international groups on the West Coast. We collectively did $12 million last year. In the last 4 years, Win Mobile Homes has done $3.1 million in transactions just specifically from Business Network International, not including all of our online presence, our branding, and the fact that we do this weekly. I think we had one question that just popped up there. So what if one of your investors has already purchased the note and I'm interested in acquiring the property? Would it be possible for me to buy it at a higher price? For example, if the current price is $190,000, I could offer an additional $1,000 to $2,000 to secure the investment. So great question. You know, that has to do, what's the word I'm looking for? Integrity. If a note I have received a offer on and we have a contracted investor on that property, I will not sell that property to, or note to, another investor just because they brought more money to the table. This business is about relationships. My objective is to get you in hopefully sooner before they, you know, we have a commitment on a property. But, you know, I think the integrity is your number one asset in the business. The minute you burn a relationship is the minute you go out of business at the end of the day.
There are enough properties for everybody. We'll find you another one, or maybe we can get that person to take a different one. We can always work it out.
You know, and you know, it's a first come, first serve situation at the end of the day. That's why it's important to attend these meetings, ask the necessary questions. You know, don't just email. Listen, call us. The phones are on. We answer 9 to 9. I've answered my phone even sometimes before 9 a.m., 7 a.m., 6 a.m. I'm here to do business at the end of the day. So if you have a burning desire, thank you. Yeah, thank you too, Angela. If you have a burning desire, you know, immediate capital, you know, please reach out. We could cultivate a small snapshot, or, you know, maybe 1 or 2 properties that fit with the capital that you have. You know, that's one thing that's super unique about what we bring to the table. This isn't one portfolio of notes. We bring these benchmarks to our strategy to bring you notes every month. And that creates a cyclical process because you know where to go to find risk mitigated, highest in the capital stack, high yield return on investment notes on a monthly basis. Go raise your capital. Go find some money. This is where it's at the end of the day. That's one step closer to financial freedom. What do we call that? Mobile mailbox money. We appreciate y'all being here today. Don't hesitate to go and view the other content that we have, the vlogs, the podcasts, the interviews with industry magnates and experts like Mark Monroe, Eddie Speed, Patrick Franz, Desi Arnaz, Kevin Shortell, Dan Deppen, Call the Underwriter, JKP Holdings. You know, man, I could go on for a year, I think. So appreciate y'all being here today. Please don't hesitate to reach out immediately. We are wire ready. Everyone have a great one. So that's what we do here at Mobile Mailbox Money, provide investors passive rates of return. Appreciate you being here today.